U.S. Treasury yields are rising. What does it mean for Bitcoin price? The 5-year U.S. Treasury yield reached its highest level in 3 months, but the typical inverse correlation-based price action with Bitcoin might not work this time. Market analysis. Join us on social networks. United States government bonds, or treasuries, have a tremendous influence across all tradable markets, including Bitcoin, BTC, and Ether, ETH. In that sense, risk calculation in finance is relative, so every loan, mortgage and even cryptocurrency derivatives depend on the cost of capital attributed to US dollars. Assuming the worst-case scenario of the US government eventually defaulting on its own debt, what happens to the families, businesses and countries holding those bonds? The lack of interest debt payments would likely cause a global shortage of US dollars, triggering a cascading effect. But, even if that scenario comes to fruition, history shows us that cryptocurrencies may work as a hedge during periods of uncertainty. For instance, Bitcoin vastly outperformed traditional wealth preservation assets during the US-China trade war in May 2021. Bitcoin gained 47% between May 5 and May 31, 2021, while the Nasdaq Composite shared 8.7%. As the general public owns over $29 trillion in the US Treasury, they are deemed the lowest risk in existence. Still, the price for each of those government bonds, or the yield traded, will vary depending on the contract maturity. Assuming there's no counterparty risk for this asset class, the single most important pricing factor is the inflation expectation. Let's explore whether. Follow the URL for the full article. For more on this story, visit the news article link.